Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 3.98% to 34,385. Ethereum down 4.91% to 2545. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as part of our globally extended KS family. I very much appreciate you being here. What we've done is to go on a bit of a whirlwind tour of the markets and just see what is performing and what is not performing. Typically, when Bitcoin is down like this, it drags the entire crypto market down with it. But we are definitely seeing pockets of green around the crypto space, and this is actually really good. This generally is a really good sign. We can see Tron and NEAR, XMR, Leo, Sand, Axie, the Graph, BTT, all performing, and this is very, very encouraging. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass, our official NFT store, and you can always reach out and directly message me on Twitter. Crypto technical analysts scientifically track investor attention. Investor attention is measured by price, which is reality, not future promises. What crypto technical analysts do, they understand that if they don't have the knowledge, they will create losses. They understand there's 4 zones of behavior inside the crypto market. Zone 1 and Zone 2, people tend to sell on red and buy on green. This makes them buy at higher and higher prices and sell and put them actually on the wrong side of the percentage. Zone 3 and Zone 4 have a very, very different prospect when they look at the market. They buy at support levels down, buying on red and selling on green, BORSOGing. This actually makes the percentage move in their direction, which is incredibly important because it's not about price, it's about percentage return. The first thing crypto technical analysts do is they mark up their charts, and charts inside the crypto market are exponential by nature. That's why they use the CTKS method. Then they look to outside trends, check the stock market, collect probabilities, go back inside the crypto market and find the market's focus, enhancing their pattern recognition, looking for opportunities because opportunities reset daily. Before they buy or sell in the trigger, they have to have that emotional control. In Zone 1 and Zone 2, people are very emotional. They go through the hype cycle. But in Zone 3 and Zone 4, people with a real wealth, positive excellence life trend focus, maintain a cool, calm and collected attitude and actually get excited on red days. Why would that be? Why could anybody be excited on a red day? Because the percentages are moving in their favor. And then finally, people buy and sell with specific methodologies. It's important to understand when people get into the crypto market, they just want to go straight to trigger. They don't have all of these foundations. That's actually a license to lose money. When people have the foundations, they're actually obeying the rules of the market. And there's a lot of rules that we need to focus on because of the exponential nature of crypto. One of those is Rule 45. No alt can escape Bitcoin's gravity. We've been seeing Bitcoin come down recently, and for those people that predicted that it would actually reach E, that is correct. That just dipped down, but it didn't climactically sell off as many people were thinking. And when we put the weekend overlay on, we can see that we're just coming out of the weekend. When we look at the shorts and the longs, the shorts are measured by this red line, and that's going up. The longs are measured by the green line, and that is also going up. There's still a lot of confidence inside the crypto market, and the shorts are expecting more downward prices, and the longs are expecting more upward prices. Let's have a look at liquidations. We can see that we've had really substantial liquidations across the weekend, and this is not common. This actually looks like a lot of retail hands are getting phased out of the market. When this happens, it is pretty much indicative to smart money that we're actually reaching a capitulation point. Let's have a look. Over the past 24 hours, 380.15 million was liquidated across 100,000 positions. If we look across the last 12 hours or last 24 hours, 81% of liquidations were long liquidations. Across the past 12 hours, 71%. Across the past 4 hours, 74%. And across the past 1 hour, 92. That means the longs are currently getting hit. We can see pretty clearly that the longs are the majority of liquidations, but shorts are always getting liquidated too. This is a lot of volume for weekend trading. Usually we get volume like this. We're getting substantially more volume like this. I'd like to show you something. This is just from Twitter, but it's really, really good. What this basically shows is when the price is going up, everybody's interested. When it comes down, everybody runs away. One thing that this cartoon should have put in it is what actually happens with professional investors. Zone 3, Zone 4 investors and traders are actually running in here when the floor is barren. And what are they doing? They're making the percentage move in their favor. There's a very, very big gain in this ramping up, and only the professionals are there to grab it. That's just unfair. And this is because when you look at the market, people are told to actually feel emotional about the market. There's all these hype cycles that people always put up, and they say, we are here in panic, or we're here in capitulation or denial or anxiety. This is not how professionals think. Smart money thinks completely inversely to all of this. They don't have these emotional states. They're professional. They control their emotion, and they do not get angry. It's really important to cross from retail thinking into smart money thinking. Not only will you sleep really, really well at night, it's the way to make money, and also to keep it. Basically, you want to be one of those people who's entering and staying in the market when price is bottoming out and coming back up. There are big gains to be made by doing this. In fact, they are the best gains in the market, but only smart money tends to hang around during that period of time. It's just such an unfortunate thing. What we're seeing with Bitcoin's price action, we have a lot of support in the current zone. We have support down to 32,332, and we've got a lot more support below that as well. We're seeing the fear gauge in the market reach extreme fear, and this is where smart money leans in. Smart money buys fear. Always think, if you're selling, who's buying? Every day we do our analysis. Where do you think it's going tomorrow? Do you think Bitcoin is coming down into E? So that's anywhere from 32,000 pretty much to around the current price. Or do you think it's going up into D, into C, or maybe even into B? Let me know in the comments. This is a really good thing to actually go through. It's a good exercise. It gets you thinking in 3 dimensions. The reason that I do it is because we must make in advance probabilistic choices. You'll see that a lot of people have different perspectives than the one that you might have. Some think it's going up, some think it's going down, some think it's going sideways. The key is to understand what you would do under these 3 conditions. And it doesn't matter if you're fully invested. You can always take some out if you wish. But the concept is, what will you do if price goes up, goes down, or goes sideways? That's what smart money always asks itself. It always says, smart money, what am I going to do if price goes up? What will I do with my portfolio, with my investments and my trades if price goes down? And what will I do if it goes sideways? We can see Bitcoin's price has recently been going down, but the underpinning engine of the crypto market, the futures open interest, is still on an uptrend and has passed across resistance. Because people get caught in the hype cycle and it's very, very emotional, it's important to remember Rule 219. Be kind to yourself, and of course be kind to others as well. A lot of people feel like the earth has opened up beneath them and these losses mean it's all over. Actually, that's what the institutions want you to feel. Don't buy what they're selling. Don't buy that emotional lie that they feed you. We're all about being smart money, being an institution of one. Think institutionally. Institutional investors and traders need to push the price down to buy, and we'll see later why that is so critically important. Many people think that there are no gains to be had in crypto, but that's not true. Opportunities reset daily, and we've seen Tron come up over the past 7 days really quite well, 28.29%. Algo is coming up, 21.19. CRV is starting to rocket, 17.3. ZIL, 11.5. Icon, just a little over 3%. And HNT, just a little under 3%. But we can see there's always opportunities inside the market. And we can also see this is APE down the bottom here, this yellow line. APE was incredibly strong a few weeks ago, but now it's incredibly weak. Cryptos oscillate between strength and weakness. And GMT was also very, very strong, and now it's become weak. That's that kind of light blue line down the bottom next to APE. And across the past 2 weeks, we can see Tron out in front, coming up 32.57%, followed by Doge, and they're all losing money in the top 20 at the moment, below TRX. But this is a very natural cycle in the crypto market. Price is always imploding and exploding. And as you saw in yesterday's episode, when we did the market run through, those percentages can repair very, very quickly. One thing I'd like to point out is the NASDAQ 100. When we look at the NASDAQ 100 and how it's moving, we can see a very strong directional correlation between the NASDAQ 100 and Bitcoin at the moment. This raises the question, where do we think the NASDAQ 100 is going? Because we know that Bitcoin cannot escape the stock market's gravity, but there are also some hidden rules around that particular area. What do we see here with the VIX? And Masterclass students, you'll get my live chart in TM6. We can see there was a spike in fear, the VIX gauge. But what did it do? It sold down. This is actually really important. A lot of people expect the VIX just to go and crash through the ceiling. It's not doing that. It actually came down. And when it came down, of course, prices come up. Just think about what happens in the crypto market. When there's a lot of fear, prices are coming down. But when fear recedes, prices go up. And this is really important. I still believe that we're going to come back in a wave. Remember, price is always moving in a wave. It would be natural to come back and test this resistance line. And a lot of people say, oh no, Ken, it's just going to fall off a cliff. There's a lot of support for the NASDAQ 100 just below this area. And that's exactly why I believe the buyers stepped in and the fear came down. We can see bond prices continue to slide and bond yields continue to go up. There's a lot of interest in the US dollar because people are not buying bonds. They're just safe havening at the moment, trying to figure out what the market is doing. And the market is really out of sync at the moment. We've also seen a bit of a kick up in the gold price. And when we look at oil, oil is definitely on an uptrend. But remember, price is always moving in a wave. A lot of people just come in here and say, I need to buy at market. I just need to get in. But you should be buying at levels of support below as well as doing your participation. And when we look at the put-call ratio, the underpinning sentiment is bearish. A lot of puts are being put into the market, but this is usually a counterintuitive indicator. When things get too bearish, it signifies that a bottom has been reached. Nearly 3 out of every 4 companies have beat their earnings. This is really important to understand. When a company beats their earnings, they're doing better than expected, better than the analysts expect them to do. And that's coming in around 73%. This is very important because the markets go up on earnings. Markets are driven by earnings. If everybody was missing their earnings, for example, if it was 100% miss, well, the markets are going to come down. There's no question about that because the earnings aren't there. And in terms of the business cycle, the US, the largest market in the planet, on the planet, is actually in and just before expansion, and this means inflationary pressures are becoming high, and we're seeing those interest rate hikes, which are just normal at this particular time of the business cycle. When we look at inflation expectations, we can see the 10-year and the 5-year actually coming down, and that's really good because that actually takes pressure off the Fed to do greater rate hikes. And we can see that Bitcoin and the Nasdaq are coming down at the moment. But always remember, price is always moving in a wave. It's going up and it's going down. That's a critical thing to keep in your mind. And we can see the federal balance sheet, the Fed balance sheet, is coming down. But the M1, M2 money stock and the CPI have upward price pressure. Looking at the top cryptos, we can see Bitcoin is selling down. We've had a couple of technical violations that have been going on. Back here was one. Here was another. This is really good for trading, and I would suggest that you always put some of your portfolio aside for trading. Now, why is that? Why should investors trade? Because all investors become traders anytime they buy or sell. Getting used to how to do it is really, really important for you. Over time, it will make all the difference in the world, and especially mastering emotional control. That is the biggest lesson any investor or trader could ever learn. What we're doing here is enhancing pattern recognition. We can see Bitcoin's gravity, this blue line. Ethereum is following it. Binance Coin is following it. A lot of times people say, Ken, what happened to my beloved alt? And I say, just look at Bitcoin. Bitcoin happened to your beloved alt. And we can see XRP coming down, Cardano, ADA coming down, Solana coming down. It's really interesting that a while ago we wouldn't have anticipated, right when we started to draw these red lines, these red buy lines down, retail wouldn't have expected that the lines could get hit. They would just say, oh, okay, it's going to go up. But we don't think that way. We always put our buy lines at levels of support way, way down. And it's important to do this because what you will find is that as price comes down, those support levels will be hit. And not always, but often. And then when we look at Luna, we were talking about when Luna was up near $120. The expectation was it would probably come back to around $60, and that's pretty much where it is right now. And then it bounced up, literally 10% from that point. This is a reason why you need to understand how the market moves. If you don't have your pattern recognition in play, you will actually lose money because you'll enter at the wrong times and exit at the wrong times. And let's have a look at AVAX. AVAX is also selling down. Now, why is AVAX doing it? Is AVAX a bad project? Bad project, AVAX. Bad project. No, it's not a bad project. It's just Bitcoin's gravity. And when you understand this, the crypto market becomes much more understandable. But there's so many rules and so much knowledge that you need to know to be consistently profitable. So let's have a little bit of a look at AVAX. Looking at this particular price area, it's coming down, but how much did it come down? We can see over 186 bars or 62 days. It came down by 63.98%. When this is happening, a lot of people are running for the hills. They're doing this. They're saying, oh, I know, I need to run away. But the professionals are actually stepping in. Professionals do everything opposite to retail. So what are the professionals, the smart money, the institutions doing? They're buying. And they buy for a lot of different reasons. They just don't buy willy-nilly. They understand what they're doing. And when we look at price oscillating, what are we actually seeing here? For example, if price came from this point up to this point, let's have a look at that percentage. That's actually come up 86.53%. And you say, Ken, how's that possible? It came down 64% and it's come up 87%? This is the magic of percentage. And all professional, smart money, institutional investors and traders know about this. You don't even have to get a full recovery to do really, really well. And we look for these signals, and we're starting to see these signals now. Retail influencers will tell you to buy and hodl and hodl. When it's going up, they'll tell you to hold on for dear life. And when it's coming down, they'll say diamond hands, diamond hands. There's a problem in this because we need to be able to buy and sell. And we need to understand BORSOG, buy on red, sell on green. That's rule 621, sorry. The concept with BORSOG is that you're buying on red. You're actually accumulating losses. Retail investors and traders wouldn't think of doing this. They want a profit, but professionals think differently. That's why there's so few people that make money in the markets, because they don't think correctly in the first place. And it literally takes decades to understand how to do this properly. But I've compressed that knowledge in the CryptoTradingKS Masterclass. So when we look at AVAX, yes, it did come down nearly 64%, rallied up 86.5%, and then in 7 days came down 34.75%, say 35%, and then went up about 41% in 5 days, and then came down over 13 days around 28%, and then rallied up 58%. That hodl mentality will cost you money in the market. That's why you should have a little bit of your percentage of your portfolio for trading, for learning how to buy and sell effectively. Because after all, isn't that what it's all about? Don't you get into investing to actually sell one day? It would be best if you don't sell down here when price is plummeting. But that's what actually happens because people keep on pressing the hype cycle and saying you should feel emotional. You're here right now. This is the stage in the process. But if you BORSOG, you're looking for support levels. You're looking for resistance levels. You're doing a scientific analysis of the market and where you place your buys and your sells. It's a much, much better place to live. That's why the CTKS global family doesn't believe in bull markets and doesn't believe in bear markets. We believe in the BORSOG market. You can always be profitable in any market condition, but you must know what you're doing. You must run the numbers. You must understand probability and abandon certainty. Certainty will just keep you awake at night. You need to understand percentages. You need to embrace losses, not run away from them like we see in that cartoon. You need plenty of rules, knowledge, patience, that three-way strategy, and above all, you need a real wealth mindset. Please let me know in the comments, do you feel that you cannot make money in a bear market? Is it a fact, for example, from your own perception or the perception of other people, that when any market enters a bear market, all the opportunities are wiped? There's just no way to make money. Please let me know in the comments. This is really, really important to discuss. And we can do it the other way. Is the only time to invest in a bull market, because that's the only time you can make money. As soon as it changes from bull to bear, it's all over and it's time to pack up and go home. Just keep this picture in mind of what retail does. They abandon ship absolutely as they should be buying, and when they should be selling, they're all in and more. This is really important to understand. This happens all the time in all financial markets, and it does take time and experience to understand how to short circuit it, but this is real. And not real for the CTKS community. We actually come in when prices are falling. We saw a big plummet like this in the COVID sell-off, and I've asked time and time again, if you had the COVID sell-off, would you buy or would you run away? And the overwhelming answer is, I would buy, because the returns on that were crazy. But the only way people can understand that is with an understanding of percentages. When we had the COVID sell-off, the markets came down very, very hard, but they also increased. And what we saw, actually, I'll just show you what a recovery would look like if we came back from this 63.98% down and we just recovered the price. We would be about 177.82% up. You can see when people are abandoning ship, when they're running, that's when they should be buying. And when they're buying, that's when they should be running. And many people say, why can't people make money? Why do I always buy at the top and sell at the bottom? Because the institutions are forcing unknown rules on you, invisible rules that you should obey, and those abeyance of those rules will actually take money out of your pocket. What I exist to do every day, 7 days a week, no matter what, day in, day out, I'm here. And I'm here to help you to think differently about the markets. We can see Theta just doing a little bit of a kick up at the moment, T-Fuel doing the same, Doge also doing the same, EGLD, they're all following Bitcoin's gravity, but we're seeing a little bit of power underneath the hood here. This is great. Phantom just doing a little bit of a kick up, CHR doing more of a kick up. What you'll see is certain cryptos have more power in them than other cryptos, and that's what we want to keep our eye on. Loopring, LRC, doing a little bit of a kick up here. Cosmos looking a bit weak, but you know these percentages, when everybody is bailing, that's when we want to participate. Looking at NEAR has had a bit of a kick up, and Matic, we're seeing a little bit of green there, and also Icon. Veracity, VRA, a little bit of positive action there. Rose is looking weak. Rune is just doing a little bit of a green bar there. And we can see IOTA doing something similar. And IOST is just consolidating. That looks quite interesting. We can see also that Sand is kicking up a little bit. Axie kicking up even more. What about Mana, Decentraland? That's got a bit of a kick in it, but Gala's looking a little bit weak. What do we see here? That Engine Coin is just has a little bit of a kick up. And Ape is starting to come down. It started to come down below that support line. And why could this be? Because what we saw with Ape, so many people were getting into it and abandoning poor old Sand and Axie and Mana and Gala and all the other ones. So a lot of money flowed into Ape from the other cryptos. And now I believe we're seeing a reverse cycling of that. People are saying, okay, I'm going to pop out of there and I'm going to come back to Axie, for example. Now this will oscillate. So just bear in mind that this is what can happen. We can also see that Chiliz is just following Bitcoin's gravity, as is SLP. Coty is just doing a little bit of a tick up, as is CRV. Waves is just pretty much consolidating around there. AR is a little bit weak. Zilliqa, ZIL, is just doing a little bit of a kick. And Cello doing the same. Cartesi is looking a bit weak, but Cartesi is really, really spiky. When Cartesi wants to party, it parties. Actually, let's have a very quick look at CTSI. Let's have a look at Cartesi. From this period to this period, it came down 82.19%. That happened across 72 days, but within 20 days, it came up 307%. This is what I say about Cartesi. Don't write it off. Cartesi is very spiky by nature, and when it parties, it likes to party. But what happened here? Look at Bitcoin's gravity. When Bitcoin's gravity turned around, it shot Cartesi up. And then what do we see? Say somebody was unfortunate to buy up here. They may say, oh no, it's come down 61.3% in 43 days and it's just going to plummet. Look at this. It's just like here. Look at that. I need to get out. And they would sell, only to see KTC rally 252% from that point. So let's have a look at the current price action. It's come down 85.73%. That's more than the 82.19%. What does this actually mean? Remember how KTC rallied 307%. What could happen to KTC? Maybe we might see something like this. Price coming up and rebounding up to this particular resistance line. And that could happen across the next 50 days. If this did happen, and I'm not saying there is no certainty inside any financial market, especially crypto, but just think about it. If it did start to turn around, like we saw this price behavior turn around here, over the same sort of relative period of time, would you believe that an increase of 346% would be possible? Please let me know in the comments. It's really good to discuss these percentages. It's critical to your understanding. If you don't understand how these percentages work, it's really hard to be more of a financial blessing to yourself and those you love. And let's have a look at ANC. ANC was doing really well, but they changed their staking rewards. They changed their APY, and what happened? We saw a big sell-off. But this is also following Bitcoin's gravity to a degree, so always be aware of that. Crypto technical analysts understand percentages, and they understand many, many other things that I don't discuss in public, because you must build your knowledge step by step. It's literally like going up a staircase. You must go through the foundations, go through the trend, go through the timing, go through the real wealth, and then get up to the trigger where you learn how to buy and sell. A lot of people want to jump to the top floor without having the foundations in. That's a nasty fall. That's why we always talk about Rule 141, and this applies to all knowledge acquisition. Go slow to go fast. And a lot of people see the concept of BORSOG and say, I got it, buy on red, sell on green. No, it takes knowledge, emotional control, and some want you to be fearful of buying the falling knife. After all, Wall Street tells everyone, don't buy the falling knife, don't buy it. Why? Because they are. And one critical thing, Rule 130, make volatility your best friend. Volatility is those crazy percentages down and up. When you understand that's just the crypto market, that opens the door to financial freedom and abundance. It's really nice to always consider that life resets daily. It doesn't matter what happened yesterday. You're an unlimited individual. You can be anything that you want to be, and life starts every day. It resets daily. And life wants you to succeed. Some people have a negative outlook on life, thinking that life is against them. It couldn't be more from the truth. Life is always waiting for you to be ready for abundance. Life wants you to succeed. If you're feeling under the weather, so to speak, it's just life sending you a series of pullbacks to help you to reach your next level, to do your next life rally. So just keep in mind Rule 359, be on the right side of the percentage. That's what smart money does, and that's what you can do as well. I hope you found the content useful. Please consider sharing and liking this video, and also subscribing to our beautiful community. We would love to have you as part of our globally extended KS family. Thank you very much to our moderators for keeping our community safe from scammers. And to the CTKS ambassadors for mentoring Masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, and you get to it by just going into the description and clicking the Show More button, and that will reveal those links. You can always reach out to me and directly message me on Twitter at any time. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.